For the next 2 years, the U.S. government pays qualified businesses up to $26,000 per full-time employee as a payroll tax refund called ERTC, Employee Retention Tax Credit. If you received PPP, you can now qualify for both ERTC and PPP. That's right, get both. If you have between 25 and 499 full-time employees, please watch this video. We've helped 500 clients so far maximize their ERTC stimulus. We've lined up hedge funds to pay you your ERTC refund in about 1 month, so you don't wait a year or more for your IRS tax refund. There are marketing organizations out there that claim they can get it in 4 months. That is a total lie. Nobody is. We also have banks and lenders with innovative loans that will loan you more than your ERTC refund in 2 to 3 months. And these lenders treat our ERTC CPA working papers as collateral. Later in this video, you will see a slide where we show that the major banks are predicting that the Federal Reserve will increase interest rates by 400 to 600% in 2022, from 0.25% up to 1.75%. Given that every bank has this opinion, let's assume it's true. The smart play is to use the hedge fund. Get your $1 million or whatever of ERTC refund, put that on your balance sheet, and then work with us with some of these innovative lenders who will get you great loan terms, and some of them even fixed rates, so that when interest rates do rise, you have a second advantage: more money and better terms for your working capital. You can use our ERTC refund calculator located on our ERTC page of our CPADueDiligence.com website. We don't ask for you to register or any confidential information. Just put your information in there, answer 8 questions, and you're going to have a fairly accurate range of what your ERTC refund is. And feel free to copy that and put it in an email and send it to your friends or even to your partners. So how do you qualify? Well, basic rule of thumb is quite simple. What you do is you look at your 2021 revenue and you compare it to 2019. And you do it on a quarterly basis. So if Q1 of 2021 is down 20% or more, revenue, not profit, compared to the corresponding quarter of 2019, you get up to $7,000 per full-time employee. If it happens for 2 quarters, $14,000. 3 quarters, $21,000. So if you were down 20% revenue in 2021 compared to 2019, you get $21,000 per full-time employee multiplied by your employee headcount. It's really that simple. 2020 is a little less appealing. You only get $5,000 for the whole year instead of $21,000, and you have to be down 50% in 2020, whereas in 2021 you only had to be down 20%. One other little caveat: if in the last quarter of 2020 you were down 20%, it will count for 2021. There are big differences in the capabilities of ERTC providers. Many, frankly, are just marketing organizations that are masters in selling and not very capable in ERTC, and we know because we see their paperwork and try to save their clients, and they keep asking us to do their ERTC filings. To date, we've done about 500 cases, and we can handle about 100 a week now. We had the respect of a hedge fund with billions of dollars to use our ERTC paperwork to get clients their money a year in advance, with a discount, of course, but there's an opportunity cost to not having it. And we've also been able to negotiate with large lenders to treat our ERTC paperwork as collateral so you could get a loan. And we provide the paperwork for an IRS audit. And the other benefit is we have much greater value at CPA Due Diligence on all sorts of things like the retention plan and many other things that create even more value for you. Reuters is one of the most established and respected news agencies in the world. They published an article that shows all the major banks, without exception, agreed that America's Federal Reserve has to increase interest rates by 400 to 600% just in 2022, because inflation is now 88% higher than it was over the last 50 years on average. So when the Fed increases rates from 0.25% to 1.75%, banks inevitably tighten their lending and collateral requirements. Since this is going to happen with 100% certainty, would it be wise to look at our more client-friendly lending institutions to get yourself a much better deal and use your ERTC refund using the hedge fund to qualify for millions of dollars more of working capital at a lower cost and with better terms? Wouldn't that make a lot of sense? We're not marketing people. We're a due diligence community of CPAs, attorneys, and specialized experts. And we vet many solutions and have over the last decade. Stimulus programs and also systems to save you and your CPA time so you can provide yourself the best value. Our CEO wrote 4 books, which are over 800 pages, and in March, our book on ERTC will be published. We've been offering CPAs continuing education credit on specialized attorney and CPA solutions for over 2 decades. And we offer CPAs continuing education credit for ERTC, and we offer that to other professionals as well. So you could say that we kind of know what we're doing in this subject matter. Thanks for watching, and if you're interested, get in touch, and this is our contact information, and email works best.